Morning, everyone. It's the 17th of June. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate. All right?
Yeah, not bad. You?
Yes, not bad at all.
Good. See Italy last night? The Azzurri?
Yeah, they looked pretty good, I suppose. Although Switzerland didn't look very good, did they?
No, they didn't.
So
And nice win for Wales as well.
yeah, Wales did brilliant. That was an awesome game to watch. That was end-to-end stuff. So yeah, really, really good.
Yeah, go on, Aaron Ramsey.
Yeah, did well. Had a great game actually, didn't he?
Yeah. Cool. Right. So, bit of fun and games yesterday. Some decent talking points in the markets for us to get stuck into. So, first up, we had the US interest rate setters, or the FOMC meeting yesterday. They began discussions around scaling back the bond purchasing program. And according to Jerome Powell, who's the Federal Reserve chair, he said you can think of this as the meeting as talking about a meeting, if you like, about cutting back on these bond purchases. And also there were two anticipated increases in interest rates expected by the end of 2023, which is faster than anticipated in terms of tightening. So that has caused some areas of worry in the market, notably with the US dollar, as we'll come on to in the chart shortly. Quite a significant jump on that, as much as 0.9%. And when we get to the charts, you'll see there's been quite a big move on those, and it's been widely felt across some of the other currencies as well. In terms of what's going on elsewhere, we had the US President Joe Biden hand Vladimir Putin a list of critical infrastructure that should be off limits from hacking. So basically, just told him, don't hack these areas of our infrastructure. It's like a red rag to a bull, isn't it?
Yeah, hack everything else, but not these bits.
Yeah,
Quite
you'll
nice.
be going
Quite
straight
polite.
for those ones.
Quite polite way of doing things.
Anyway, so we'll wait and see how the relations between the two turn out over coming weeks and months. But it looks like they're going to reinstate their ambassadors in their posts in the US and Russia. So diplomatic at the moment, it would seem. The Westminster soap opera is continuing as well. Dominic Cummings, who was the former aide to Boris Johnson, released WhatsApp messages showing the UK Prime Minister branded Health Secretary Matt Hancock a totally effing hopeless during the early stages of the pandemic. So that's more unwanted drama for the UK government. He was questioned on this. And he said he had full confidence in Matt Hancock. And when they asked Matt Hancock if he was hopeless, he replied, "I don't think so." So
let me come back to you on that.
Yeah, I don't know.
It's bizarre, isn't it? I mean, I think the leaking of text is just ridiculous.
It's all like
what is going on in the world
in public? There's no need
yeah,
for it,
and also
none of us, we don't want to hear it, do we?
No, not really. No, we don't. Only sort of like the keyboard warriors do. Sod off, keyboard warriors. Just sort of like get a life.
Yeah.
It's pretty just like disgusting to sort of like see it. Shouldn't be seeing things like that.
No, there was a vaccine maker that was touted by Tesla boss Elon Musk over the last few weeks and months, and that lost half its value yesterday after hours in US trading, because it found that the vaccine that they created was only 47% effective. So I don't know if there was any Elon followers out there that jumped on board with that one, but they'll be nursing some losses on that today. What else we've got in the news? I think that's pretty much it. Just in terms of the US dollar, which I'll come on to in the charts first up. In fact, we'll probably dive into FX first today, if that's okay, Steve, because I've not had much to speak about on FX for a while, but we have had some interesting moves. But as I mentioned, it was about a percent move higher in the dollar index yesterday. The hawkish turn prompted both Goldman Sachs and Deutsche Bank to abandon their calls that the euro will rally against the greenback. and some are now predicting a broad-based dollar rally over the summer months. I imagine there's a lot of short interest that would have been cut back on the move yesterday as well, and probably still a bit more to do. So let's just get stuck into the chart. So here is the dollar index chart on a daily basis. So anyone who's been watching this for a while will know that I've been calling for a bit of a corrective move to the upside following the break of this channel. It was a little bit sort of slow in getting going, needed to overcome this resistance that had formed at 90.62, and it all happened at once yesterday. I was targeting a move up to the resistance line at 91.43, which it got there yesterday. I didn't expect it to be as aggressive and abrupt as it has been, but it's got there. And now what we're doing is challenging this long-term downtrend line, which is drawn in blue. Now that's been in place since March last year, as you can see here. So we are taking that out as it stands at the minute. We're on the front foot again, up another 0.3% to add to the 1% that was made yesterday. And in terms of where the next levels to target, then we'll be looking up here at this red line. And why have I got that red line drawn? That's at 93.02. There was a gap that was created here on the 5th of April. So we closed higher on the 5th of April, but then gapped lower on the 6th of April. And that gap remains unfilled. So that will be a natural area to target on the upside, providing we see a close above this resistance level on the daily chart later today. So it looks like dollar strength is set to continue. But of course, you know, we are in and around an important resistance line at the moment. So we'll wait and see if it can hold on to this on a closing basis.
I mean, so we have seen it. If you jumped on the weekly chart, Joe, it was sort of giving us a few signs of this bottoming out.
Yeah. Double bottom, maybe.
Well, no, I mean, there is potential for a double bottom if we break above the 93.44. But you can see the sort of candles on the weekly chart sort of like running up to what we've just experienced. These sort of like the doji cut candles, the sort of almost just signs of a sort of like a bottoming formation. So, you know, that is...
I mean, I was all over the bottom starting to take shape when this wedge broke. But then we saw this sort of retest back down here, and I was sort of questioning it a little bit. It got down, overshot the 78.6% fib level. It got actually down to an 88.6, which is sort of rarely used, but it didn't make a new low. So while that was the case, there was also, you know, this possibility that it could be forming a bottom. And just, you know, I know it's early to call, but if we do break above this 93.43 level, then we will be completing a double bottom in my eyes, and then, you know, maybe we're targeting a move up to this 97.66. So maybe that's a sort of longer term target potentially on dollar index. Let's see if that also marries up with a fib level. Oh, look at that. Perfect. 61.8% fib level of this entire move pretty much is bang in line with the measured move of a potential double bottom pattern. So
it.
Potential for maybe a dollar move up to here over the medium term, and that's kind of in line with what these banks are saying, that they now believe there could be a broad-based dollar rally now that we are talking about obviously tapering off the bond purchases and also potentially a rise in interest rates over the next couple of years or so. So what has that done for euro dollar? Because obviously that's the inverse of what we see on the dollar index, and I was looking for seeing how this was support yesterday was going to do a job at 21.03. I was targeting supports lower down between 1.2026 to 1.1986, both of which have been taken out today. And maybe we are starting to form this top pattern on euro dollar, potentially a large head and shoulders pattern now taking shape. It looks as though, you know, we're under a lot of bearish pressure today and could be heading down towards this neckline eventually to test that and maybe complete this head and shoulders top. Still got a bit of work to do, and it's only a potential top pattern at this point, but obviously there's been an uptick in volume on the big move to the downside yesterday. And just to sort of indicate as to where price could potentially go if we do complete this head and shoulders top, then we'd be looking down here at 110.56, you know, which is a pretty significant move. And if we look at that from a fib perspective to see if there's any levels that are offering some confluence, then we've got a 78.6% fib level close enough to this measured move target of a head and shoulders top. So some potentially, big levels to target down there, but still a bit to do. But certainly looking quite bearish and on the back foot today. Cable. So this was an interesting one. It was sort of stalling at resistance up here at 142.41. It looks like we filled the gap that was created, and we're actually moving a bit lower today. It's not doing as bad as euro dollar, so there is a little bit of underlying strength in sterling, but I'm not sure how I feel about this. I mean, obviously, if it closes below these this trend line and this horizontal support here, then we could be in for more of a corrective move to the downside, potentially down towards 136.70. As sort of the next target for me, but I'm not giving up hope on that yet. I think there could be some support form around here. We'll have to wait and see how it looks tomorrow morning when we refer back on the daily chart. So looking at some of the other riskier assets, so Aussie dollar, obviously that broke down quite considerably on the back of the dollar strength move. It's again not holding up. It's holding up okay. We've got a bit of a doji formed, although we've seen a bit of volatility this morning on that. But we haven't been able to recapture this support level, which is now a resistance level at 76.45. So we could be heading lower towards 75.32, and maybe forming some sort of top pattern here as well. Rounding sort of price formation that's been taking shape on the daily chart for a number of months is potentially a concern. So keeping an eye on that. And if we break down below that 75.33 level, then we'd be taking a measurement from what we're suggesting is the head of this pattern down to this neckline, projecting it lower, and we're looking at sort of 70.58 as a target on the downside there over the short to medium term. Similar situation on New Zealand dollar, US dollar. Again, potentially rounding sort of formation going on here, having broken out of this wedge. Price action has been pretty sideways for a number of weeks. Next target here is at 69.43. If that breaks, then we'd be targeting a move over the medium term towards 64.27. Just to finish up on a couple of the dollar markets. So dollar yen. Again, this had been my favourite dollar area to play just because yen's been so weak. We are now approaching the resistance that I was targeting at 110.96. Bit of weakness on that today. Yen sort of stabilising itself, also seen as a bit of a safe haven in certain circumstances. Dollar Swiss, nice break to the upside there through resistance at 90.53. Maybe a big bottom pattern taking shape here. Obviously, we've broken out of this corrective channel. We've now taken out some horizontal resistance, and this looks to be good to continue heading higher in the short term, in my opinion.
Yeah, nice double bottom there on the daily chart.
Yeah, the other market I wanted to take a look at was dollar CAD. This has been in a horrible downtrend. And it obviously been in a channel for a number of months since March. Some suggestion that price was beginning to bottom out when we started seeing these this narrow range start to form. We've seen a nice breakout here on a closing basis on the 11th of June. A little bit of a pullback, and then we've started to roar back up to the upside. So that's looking quite good. We are approaching resistance of the downtrend channel. And also from this previous low here, which should act as resistance at 123.65. So maybe a little bit more upside in the short term. If we can break out of this wedge or channel, then we could be looking for a much higher correction on that one over coming weeks and months. So potentially quite an interesting setup there on dollar CAD. So yeah, finally some points of interest on the FX markets, obviously all being led by this dollar index move. That's pretty much it from me on that front of certainly on the markets I wanted to talk about. So Steve, I can hand it over to you and you can tell us what's going on elsewhere.
Thanks, Joe. Yeah, we'll run through the commodities first. So looking at crude oil, we're looking at the weekly chart and we're in still in the fifth and final wave of this impulsive move higher from the $10 level, looking to target around about 76.80. We've had this is the fourth positive week on the trot, so looking very nice from the long-term medium-term point of view. However, yesterday's candle wasn't so pretty. On the daily chart, we got close to the 72.84 resistance level we highlighted. It stalled just in front of there on this chart, got up to 72.71 and reacted lower. However, we have had a little bit of a comeback overnight. So looking a little bit mixed on the oil, and yeah, potential for a little bit of a stall in that move. Now, the exciting one to look at that we've been talking about is gold. Again, we'll look at the weekly chart. We've been talking about this channel formation and the failure here with the hanging man candle. It's like an evening hanging man doji type candle formation, negative anyway. The reaction from here and obviously this week is really sort of motoring now. We talked about this yesterday and we said a break of 1845 should lead to a fast move lower. Wow, isn't it great when technicals really do work? We saw that break and nothing held back. Got down just in front of the psychological level at $1,800 and reacted from there. For me, there's more to play out on the downside. Any rallies towards 1845 are maybe an opportunity to set shorts for a more determined move lower. Potentially, without going into too much detail, I would say we're looking at targeting the 1755, 1760 area over the coming days even. These moves happen a lot quicker than they used to. So yeah, be very, very careful with that, forming a bit of a bearish flag already on this 4-hour chart. Let's move on to, should I do cryptos? Why not? Obviously, we'll get onto a little bit more of this on the Gun to Head challenge, because I still view the 40,900 to 41,000-ish area as a key resistance area, and we seem to have held. We had this break above it on the 15th, and this is the 4-hour chart, but it failed, and then we saw a breakdown yesterday when everything, when the SH1T was hitting the fan. This was my trade idea from yesterday. Really tight stop in it, only a 400-point stop, probably the width of a spread in some platforms, but not on the main platforms. And we saw a really decent move lower. We've bottomed out around about 38,100 and reacted from there. So for me, this is now the level to watch. This support level coming in at 38,100. Break below there, I think we'll still continue to target a move down towards 36,000. However, if we manage to break above 40,000, well, 39,700 to 40,000, then again, potential to retest this area around 41,000. But this is an hourly chart. Looks like it's starting to fail. But this nice little impulsive move, ABC correction, potential for a little bit more of a test of that 39,700 before it the failure is really confirmed. Indices, FTSE not faring too badly really. Obviously a lot of dollar-based products and assets in here and stocks in here, and so it's holding up quite nicely because the dollar's holding up or pushing higher nicely. We've just reacted lower from the 72.18 level. We talked about that yesterday, and we managed to get down to 71.33 and reacted from there, 71.66 trading. So still mildly bullish on the FTSE. The DAX, a little bit in between on this. There's this double top formation. We highlighted a break of 15,672 would confirm it. It was confirmed, but it is failing. Really, if we get back above the 15,760, then we're looking at new highs again. We're looking at targeting new highs again in the DAX. So it's holding up okay at the moment, but it's still early days. The Dow, however, our US friends aren't taking it so well. Obviously, higher interest rates and the paring back of buying all these lovely, beautiful assets is obviously looking at sort of like failing. So the real support level we had in here, 34,200, broke. Really aggressive move lower. This downward channel has now blown out, so we'll get rid of that. Really looking for where support is now. coming in here 33,800 and above 34,200. So yeah, negative on Dow really. The tech sector, Nasdaq, again had a similar sort of reaction yesterday, sold off quite aggressively and has held at the support which we highlighted yesterday, 13,846. Bounced off there quite nicely, and we got the big Ichimoku cloud. So looks quite positive initially, but if we do retest this 13,846, I doubt if it'll hold, and we could see another sort of bit of a capitulation today. S&Ps again, that broke the support level 4,208. We did get down to just below the 4,200, which was negative. Closed below there, but only for one candle on this 4-hour chart, and then managed to work its way above. It's below the Ichimoku cloud. I'm slightly negative on the S&Ps. Aussie 200 looking still constructive from a bullish point of view. China 50 though, as I said, have said all along, this is the one for me that is leading the way. We've confirmed a double or treble top. So any rallies towards 17,770, I would be selling into, especially with the support, the support of the Ichimoku cloud, which is a resistance. Try and understand that. Hang Seng similar, head and shoulders formation for me confirmed, and we're continuing to spike lower. We've reacted from 28,150. That'll be the next support. Be careful with that one. And yeah, I think resistance, we'll run into resistance around about 28,630. Selling into that with a tight stop would be a nice one. Impulsive move higher, played out and stalled where we left it. I don't think this was a particularly measured move of I remember just drawing this on the charts, and we've broken down lower again on the Nikkei, so negative on that. That's the roundup for me, Joe.
Nicely done, Steve. Okay, so gun to the head trades from yesterday. Steve, you had a lovely winner again on Bitcoin, so you've been ringing the bell on this one for quite some time, and being very consistent in your approach with it, and had a nice win again yesterday. 1,462 ticks on Bitcoin, or 3.66 R as we prefer to use as a metric for measuring success. So congratulations. I was stopped out on dollar CAD, was trying to get back-to-back wins on that one. The FOMC meeting just came a little bit too late for me in the day. I actually missed out on a 4-hour win by the sake of 2 ticks on that yesterday. So this is my trade
that's like
setup.
A gimme. We should give you that.
No, there's no gimmies, mate.
Let's have a vote. Anyone online watching?
There was the low.
Yeah, we'll ignore the stop, Joe.
Yeah, no, we can't be doing that. That's not the game, I'm afraid. So, I take my medicine, take it on the chin, move on. That is part of trading, unfortunately. As sickening as it is, it's unfortunately how it goes sometimes. So, let's have another look. So we're both doing all right this month on the old gun to the head, and I think that's partly down to a bit of an increase in volatility. So this month I'm currently up 6R, and Steve is currently up by 7.8R. So all looking quite a bit better on the old P&L front. Nice little spike to the upside in the last few sessions. Let's keep this momentum up, Steve. What you got today?
Well, I've got sort of like a couple of choices really. I mean, like gold and let's just do gold, shall we? I've told everyone that I've sort of like fallen out of love with it on the short term. Let's just drag this one down and plop it here, shall we? I mean, that is ultra aggressive. Let's be sensible about it. 1815, yeah, that sounds like a really nice number.
Love the scientific approach.
Nice round numbers. That'll do, donkey. I'm going to put the stop just above the high of the last hourly candle and say to you, if 1800 goes again, I think we're going to see a fast move lower. I'll put the bid in at 1785. Generally sort of like the sort of when we do get these fast moves, you tend to get a $15-20 move out of gold. It's around about the sort of 2 ATR type level.
Nice.
It might not even be 2 ATR. Might have changed since I last looked at it. But yeah, so that's me selling gold here, having to stop at 18.15.65, which is pretty tight. If you were going to be a little bit more cautious, you'd have your stop at 18.25, but targeting the move to 17.85. And if you were going to be a bit more aggressive with the target, I'd look at 17.60.
Cool. I'm going to take a look at cable. This is the daily chart, and as I've been saying for a while now, my FX analysis in the morning, I was expecting this move down to support at 139.85 on cable to fill this gap and come in line with this trend line. Yes, we have closed below the trend line yesterday on quite an aggressive move to the downside, but we seem to, at the moment, be holding this horizontal support at 139.85 and posting a bit of a doji. Now, obviously, dollar strength has been pretty good. No sign of it letting up at the minute, but maybe has it done too much on an intraday basis? And looking at this from sort of medium-term view, we are into this downtrend line at the moment. So faces a stiff test, I think. It's got potentially a bit to do today. There's obviously a long way to go between now and when this will close off on the session. So I'm going to use this as an ideal point to get long on an intraday basis. This is the hourly chart. So we've got some support from a level back here that was seen on the 29th of April. We've pulled back to this level. Yes, we've had a little bit of an overshoot of it, but nothing really on a closing basis. So let's buy now 139.89, targeting a move to 140.98 with a really tight stop loss at 139.60, looking for just under 4R, 3.9R on that one today. Let's see.
Nice.
Okay, so data-wise today, we have the latest out from the Swiss National Bank today. They've got a rate decision, and aside from that, we've got US initial jobless claims, which is due out at 1:30, and at the same time, we have the Philadelphia Fed manufacturing index, which is also due out at 1:30. So a couple of bits to be aware of, but I guess most of what we see today is going to be in reaction to what the FOMC said yesterday with regards to tapering and the potential for rate hikes coming sooner than expected. So that's pretty much it from us, unless you've got anything else to add, Steve.
No, I just sort of saw a news headline that Ryanair and Stansted owner to sue the UK government over traffic light travel restrictions. They're suing them. They're suing them because they want more transparency. Oh, do you really? Just sort of like listen to what the government is saying, mate, and just get on with it. Right, obviously, Michael O'Leary from Ryanair is joining the owners of Stansted and Manchester airports in the joint High Court challenge. So you're not ballsy enough to do it on your own then.
So yeah, just in our pockets, that's for sure.
Yeah, well, yeah, maybe. But we put him there. Don't forget that, Ryan.
Cool. All right. Well, thanks very much for watching, everyone. We'll be back tomorrow, and until then, trade safe.
Cheers, mate. See ya.
Bye.